Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're taking you behind the Nasdaq opening bell with Sal Bruno. He is the CIO and Managing Director of IndexIQ, a New York life investments company. Marc Chaikin is the founder and CEO of Chaikin Analytics. Thank you both for being back at me at the market site. And we're going to talk about harnessing the power of multi-factor investing. So Sal, I'm going to kick it off with you. What is multi-factor investing and why is it so relevant now?
So factor investing has been around for decades. It goes all the way back to thinking about the first factor, which was the market and the capital asset pricing model. And you go all the way through some of the academic research that came out in the 90s on size and style from Fama and French. And so when we were looking at factor investing, we saw a lot of rotation in terms of which factors perform best year to year. And we thought that using multi-factor might be a way to smooth out some of that volatility. So I think it's really important to have a differentiated approach than market capitalization weighting to getting into the equity markets. And we think multi-factor is a really good way to do it because it tends to smooth out some of that cyclical performance of some of the factors.
All right, and Marc, tell us about Chaikin Analytics and how it fits into this.
Chaikin Analytics is a firm that has a series of tools for high net worth individuals and advisors. The centerpiece of these tools is the Chaikin Power Guage rating. It's our multi-factor model that draws on everything I learned in a 30-year career working with successful active buy-side portfolio managers. So as opposed to some of the theoretical models that Sal referred to, built by academics, this model is based on how Wall Street works. It looks at value, growth, technicals, and sentiment, and it's worked because it's based on how Wall Street works.
All right, so as Marc had said, the Power Guage works because that's how Wall Street works. How's that been applied to the IndexIQ ETFs?
So Chaikin Analytics had partners with Nasdaq to basically overlay the Chaikin Power Guage on existing Nasdaq large cap and small cap indexes. So when we were looking to get into the equity space for ETFs, we looked at the Chaikin Nasdaq indices. We found it very compelling, the Chaikin Analytics and how it was overlaid on top of the Nasdaq indices. So IndexIQ has partnered with Nasdaq to license the indices, and they form the basis for our two most recent equity ETFs. So we have the IQ Chaikin US Small Cap ETF, the ticker is CSML, that's based on the Nasdaq Chaikin Small Cap, then the IQ Chaikin Large Cap, the ticker is CLRG, which came out in December of last year, and that's based obviously on the Nasdaq Large Cap. Both came out last year. The C Small came out in May of last year and has about $470 million in assets so far, just short of a year being out there. C Large came out in December of last year, so just short of 6 months, and has about $330 million in assets. So by most standards for successful ETF launches, we meet the metrics of attracting significant investor interest in the products.
All right, well, thank you both for being here. It was great to see you as always. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.